Welcome to this weekly macro and strategy update. Today, we would like to focus on the most recent actions taken by the European Central Bank and its implications for Swiss monetary policy. Our main takeaway is that given that low inflation rates will persist and the upward trajectory for future inflation is very modest, the ECB will have a bias to announce even more easing measures in the future. Last week, two main highlights of the most recent ECB policy decisions include the following. First, an increase of its asset purchase program PEP by 500 billion to nearly 2 trillion euros. This will bring the total of this temporary asset purchase program alone to close to 20% of aggregate Eurozone GDP. Of note that the PEP purchases will be extended in time until March 2022, a full 9 months longer than previously mentioned. Second, the bank lending schemes, or TLTROs, were extended, which make it more attractive for banks to finance loans. Of note, what the ECB did not do, it did not lower the deposit rate further into negative territory. This suggests that Switzerland's SNB on its side, given the importance of the differences in interest rates, is unlikely to change its policy rate at its upcoming meeting. Strategically, we note that the ECB is following the option which accepts that the convergence to the inflation aim will take more time and that inflation will be even lower than originally envisaged during the transition path. Now, this is contrary to the so-called two-pillar strategy forwarded by some. This approach, favored by ECB Chief Economist Philip Lane, for instance, consists of bringing inflation quickly up to pre-crisis levels and then follow the transition path towards the inflation objective. This strategy, discarded for the time being, would have implied an even more radical policy intervention via more aggressive monetary policy accommodation. For the time being, the ECB chose to be less proactive. Indeed, core inflation will be only 1.2% in 2023, according to its own projections. This underlines the disinflationary effects of the pandemic, with headline inflation to be only modestly higher at 1.4% projected in 3 years' time. In sum, the upward trajectory for inflation is very modest. In our view, the ECB is likely to do even more in the future. Now, this is our last weekly macro update this year. We wish you all a very happy and healthy holiday season. Thank you.